Hey, how's it going, everyone? Kenny here. So today we're going to talk about sentiment, and as you know, on the Redcliffe Research channel, we do like to measure sentiment, and we take a look at generally how it influences and affects the market. So today we have something special for you. I'm going to show you one of the indicators that a lot of folks use, especially folks that don't have access to prime brokerage data and all the big hedge fund monies, right? So with that being said, we're going to talk about something that I use pretty regularly, and it's definitely flashing an interesting signal right now, to me at least, and to the way I interpret this data. So today we'll be looking at sentiment that is basically binary, so either it's bullish or bearish, and there's also a neutral rating, right? And we're going to figure out how that is going to lead into expectations for the market as a whole, and whether or not it directly reflects how the market has been or where it's actually going. So history does show us that more often than not, the market will go against the majority, okay? So this is what we would call a contrarian indicator. And the reason for that is extremely bullish levels of sentiment are often come after these strong market run-ups, right? And when investors are feeling very good with themselves and with their balance sheet, for instance, right? So their stock price has gone up a lot, substantially. So has their portfolio. But the problem is, when this happens, the same investors have limited resources to invest or deploy. So there's a lot of different ways to measure market sentiment, obviously through surveys, through examining trading data such as block trades or short interest, for instance, especially for options, or even by monitoring the trend of cover stories, etc. Major publications. You can also obviously do social media analysis, social network analysis, and a lot of social media scraping, i.e. Reddit, subreddits, etc. So today we're going to focus on a single gauge of the market sentiment, something that people have been using since 1987. So this is the AAII Sentiment Survey. So the AAII Sentiment Survey basically measures the percentage of individuals who are bullish, bearish, and neutral about the stock market within the next 6 months. This was originally started in 1987 as a weekly survey, and it was sent out via snail mail to random sample of the AAII members. So if you look at this chart here, they made 12 observations of bullish sentiment, at least 2 standard deviations below the mean. That's less than 16.2%, indicating a low level of optimism and potentially an indication of a market rise. For these 12 instances, the S&P 500 on average gained 16.2%. The results were just as telling when looking at bearishness. We made 40 observations where bearish sentiment was 2 standard deviations above the mean, greater than 46.3%. This is an indication of high pessimism among investors and potentially a sign of a market rally in the coming months. When this occurred, the S&P on average gained 18% in the succeeding year. Raising the bar even further, they found that 8 times when bearish sentiment was 3 standard deviations above this mean, that's greater than 55.5%, the results were even more remarkable, with an average 1-year gain in the S&P of 23.7%. And lastly, they examined the market's direction when the bearish sentiment was 2 standard deviations below the mean, less than 9.5%. This happened 5 times, with an average decline in the S&P of 17.6% over the next 12 months. So what you're looking at here is basically all the data going back to 1987, and this is obviously curated bi-weekly, right? So each week they take the survey and then they ingest the data and then they display it here. What I'm showcasing right here in the yellow is basically any time that the data or the bullish rating is 50% or greater. This is not necessarily showing signal. There's a lot of different things. There's causality, and there's also other nuances that you might want to explore. For instance, as you can see here, there's pressure building, 47, 45, 40, 49, 48, and then it gets to 50. That is a lot different from a gap up like this. So 37 to 55. This could mean no signal. Vice, this could mean signal. And so I'm going to plot it for you and show you what I came up with. But it's not necessarily anything that's triggering for me, but it's definitely something that I'm monitoring and I'm aware of. So in the green, this is where bullish sentiment is less than 20%. So this would be contrarian as a buy signal, right? And so I'm just going to go ahead and show you what I came up with, again, on the chart, but basically it happens once, twice in the last, I don't know, a couple of years, right? So I didn't want to go any farther back than that. It does get distorted, but I do want to showcase what that could actually look like. So as you can see here, we have 4 bullish ratings going all the way back to January of 07. And you'll notice that while on the short term right here, you don't really get much. It's like maybe a 5% pullback. Over the year or the next 2 years, you do get a substantial signal here. Likewise, same thing here. You do get a substantial signal, but this is like the weekly chart. So this is looking like about 1 year. Yeah, if I go ahead and map this out, yeah, about 273 days. So 3/4 of a year to a year. And this one, obviously, as we start to bleed down, this one's a year right here. And so you would definitely have seen, you know, the sell-off there. And that's a very clean signal. And then obviously, if you re-examined or held that signal, you would definitely make out like a bandit staying out of the market for that entire duration of that sell-off, which was greater than like 40+%. So that said, how about over here? Yep, same thing, about 1 year. And here is the next time that this signal flashes, which is right now. July of 20 is the next, or I'm sorry, not July of 20, November of 20 was the last time this signal flashes. And so I'm definitely interested in seeing what is going to happen. Again, I'm not saying that this is going to happen, but it's happened every time so far. So definitely looking at next year being very, very bearish, just being very careful with our money. Now, I'm not saying that this bull run is over, but I definitely think we need to think about how we're playing this. And then for these other signals, these 20%, the last two have been some very strong signals for risk on. As you can see here, I mean, if you regress this whole COVID-19 area, we definitely got a very strong 45-degree trend up, and I would suggest pretty much the same thing here on this second signal at 20%. So as you can see, on their own, without any kind of nuance, the 20% bull signals are pretty clean, especially for the time frame, which here you can see is, you know, about a third of a year, so, you know, a quarter or so. And so the same thing here. Right now we have a good, decent extended run for about the same amount of time. So, you know, can there be a correction here? It looks like it, according to this signal, right? If we're looking at how long these little 20% runs run, you're looking like it might be late cycle on this run, and it looking like for sure we're signaling here again. This has only flashed 4 times in the last, oh gosh, since 2007, right? 13 years, this has only flashed 4 times. So we do have a definite signal here that there might be a bear market coming up shortly. How or when, I have no clue, but we definitely should be skeptical of what's going on, and we should be very cautious proceeding on. I'm not fully convinced that we should be risk on here. In fact, I have trimmed a lot of my positions and deleveraged. I did get this run last week, and that's because a lot of the signals were you know, lining up for me, at least as a personal investor. And so that's how I played that. So, I mean, obviously I'm not a financial advisor and we're doing this just for entertainment purposes only, but if you will, this is kind of like how we are looking at it. Hey, thanks for watching, everybody. If you want more of this kind of thing, you can go ahead and sign up for our free newsletter. Link is in the description. We also have all sorts of playlists for this kind of thing. This one will be in the Trading Concepts playlist, and that's probably where I'll go ahead and send you. If you want to learn more about Red Cliff Research, you can go to our website at redcliffresearch.com. And finally, the Innovation Lab is opening up to 2 members right now. I think we have a vacancy. So if you're ever previously interested in Innovation Lab or want to see what we're all about there, now it's a good time to go ahead and put in your application. So application is on the website under Innovation Lab. So same spot, redcliffresearch.com. Thanks for watching, and we'll see you tomorrow.